You're listening to What's in Store, the official Hardlines podcast series, bringing you the hottest conversations with players in the home improvement retail industry, and brought to you by Geldwen. I'm Geoff McLarney, here with Editor-in-Chief Steve Payne, and today we're talking to Russ Permann, CEO of Taiga Building Products. Welcome, Russ.
Good afternoon. Thanks for having me.
So, Russ, tariffs, obviously it's all anybody can talk about, and it's hard to know what to say because everything can change. We're speaking today, it's June 19th, and this will probably go live in about a month from now. The commodities experts Hardlines have talked to agree that few in our industry have felt the impact of tariffs yet, as of, say, late May. Both because this year has been slow moving for LBM product, and because most of the LBM stuff on the ground in Canadian lumberyards is not yet tariffed. To what extent do you think that tariffs will become a bigger issue in the second half of the year, especially as yards start to get their reorders in?
Yeah, good question. I don't think now it's a question of timing of ordering. It's really a question of confidence. Market prices for commodities, you noted that the market slowed down. Market prices have declined, and to some extent they've offset some of the impacts of potential tariffs on goods. I should note that Canada and the US are presently under protections of the CUSMA or the USMCA, depending on what side of the border you're on. So trade is less impacted, although we still have goods that are impacted by tariffs on both sides of the border. But market prices have also declined a little bit in this market to help offset some of the impact of tariffs. But the reason prices have declined is not tariffs necessarily. They've declined because of weak demand, and weak demand is a function of consumer lack of confidence and thus retail lack of confidence. And so what we're really seeing is that there's not as many people coming to the market to trade in commodities as we might see in a more buoyant market. And that's really probably created a little bit of an offset to the impact of tariffs. So I don't think people are necessarily seeing a rising cost of building materials inflationary wise in their inventories, because the pricing market is sort of the commodity market is doing its natural thing and stepping in and providing a certain amount of relief because of the weak demand that's a function of uncertainty. And the issue now is to say what will happen forward is that I think we've been saying this since the beginning of the pandemic. We don't have a playbook or a framework necessarily to help us guide through these markets, and that's especially the case now, when at times I think that uncertainty is the actual strategy. I think that when you're trying to create uncertainty in the environment to create a trading platform that you think is best for your side of the negotiations, sometimes injecting uncertainty is in fact the strategy. And I think that's part of the issue now, is that it's hard to tell people where things are going to go when uncertainty is the strategy. And I do believe that's part of a big part of it. So I think from our perspective, we don't presently see a lot of inflation. It's very targeted on very specific items in products as a function of tariffs. But what I do see is volatility coming, and that will be a function of uncertainty. I don't think we're getting a clear direction on market yet for the fall, but I think that there is equal chance that we'll see some inflation again on the material side, but that's going to be a function of getting some kind of trade deal done between the two countries.
An easy one for you here, do you think we're going to enter a recession?
Yeah, great question. I've read analyses lately that suggest we're already potentially technically in a recession, or at least in a technical recession. It's tough to say, again, going back to the point I made on the previous question, it's tough to say what trajectory the market will take. And really, when we look at the Canadian market, it's hard to answer that question because there's so many regional differences to account for. There are clearly slower parts of the country that arguably are probably in some form of recession now, certainly on the building products and the housing side of the market. When you look at Ontario and BC, much quieter, and likely are, if not in an actual recession, quite possibly in some form of technical recession. But there are other parts of the market that are relatively buoyant. You've got places like Alberta and the prairies where business is still very robust and sound. So, I think it is a very regional question, and it might be difficult to say, whether the country will enter into a full-blown recession or not. I think the risk is obviously there, although I think optimism is building around, recent talks between our federal government and the U.S. presidential administration. So, I remain optimistic. But what we see now is caution. There's limited speculation in the market and a lot of well-analyzed procurement behavior, which I think is wise and appropriate. I'm bullish on housing long term. I think underlying demand for housing is there. I think theoretically, based on the election results, government will to support housing is there. I think we just need to get past this short-term uncertainty for housing to sort of hit its stride. I think the back half of 2025 could be weaker than we had all hoped going in, but I can see strength beyond that.
So the last time you were with us, you talked about the gap between the possibilities and the reality around technology in the LBM industry. 2 years on, can you tell us what Taiga has done to narrow that gap?
Yeah, great. Thank you for that question. I think it's an important one. Technology continues to be where our core investments are made in our business. We're still investing in two key areas. We obviously invest in the people enabling side of our business. That is, we invest in areas that makes it easier for our staff to be more efficient in doing their work, and obviously in supporting our customers. We definitely put the customer at the center of all of our decisions around technology, and I think we continue to make investments on enabling our people to make their jobs better and to make our customers' lives better by extension. The other area that we invest in is direct customer enablement technology, and we continue to make those investments. And our focus there is to maximize the transparency our customers have in doing business with us and other partners for that matter. We want people doing business here to have maximum control over the experience that they're doing, maximum control over the experience of doing business with us. As a company, we've got our online store. Taiga Now is launched. It's a B2B platform. All of our customers are free to use it, and they can look at our inventories and check their prices individualized to them at their store. It's launched, it's operating, it continues to be enhanced. So that's probably a change since last we talked, or at least we were in very early days back then, and we're still, there's much room to grow on that side of the business, and we continue to invest there. But we're also now starting to work on some AI powered solutions that are focusing on making our customers' lives better in operating their own business. We're in some early pilot stages, so I won't reveal too much about the activities there, but we're in the early pilot stages with a handful of customers working on some technology there. But expect from us in the coming months to come out with technologies that help our partners get better at predicting their inventory needs and integrating with us to satisfy those needs in a more immediate fashion. And so it'll start to break down some of those barriers that we have in business that are just a function of the way we transact today, and trying to streamline some of those communications. So we continue to invest there and work on that. We're pretty excited about where that technology is going to go, but early days and more to come.
A common theme when you talk to the LBM dealers in Canada is Mr. Trump's tariffs have made us change suppliers, a lot of stuff like that. And it's important to recognize that it's not Mr. Trump's tariffs that are affecting Canadians who are importing stuff from the United States. It's the Finance Department of Canada with their retaliatory tariffs. So, having said that, you yourself, Taiga, exports probably down to California and in Oregon, where you have distribution facilities. Is Mr. Trump's tariffs affecting your business with California and Oregon?
Yeah, good question. I think you're right. To touch on your first point, I suppose that is the technically correct. That really what's impacting the Canadian market is retaliatory tariffs. But of course, to have a retaliatory tariff, you have to have a precipitating event, which would be the tariffs launched by the U.S. on Canada and really the rest of the world. But point well taken, and something we have to remind ourselves of when it comes to our U.S. business. It's an enterprise that stands on its own. So we don't necessarily export from our Canadian business to our U.S. business. They procure on their own, and they are importers of goods. They buy Canadian lumber. Some of our divisions down there. So we have 3 distinct divisions down there. We have a traditional distribution business that operates mostly in California, Northern California. We have a wood preservation business, much like our treated wood operations here in Canada, that's in Washougal, Washington, and covers most of the Pacific Northwest. And then we also have a wholesale trading business that operates out of Oakville, Ontario, and covers sort of the East Coast, everything east of the Mississippi in the U.S. And so they are distinct businesses and have distinct needs and impacts on their business. They're all unique in character, and they are experiencing some of the same effects caused by the current uncertainties in the market. That is, directly paying tariffs. We have some. They are targeted, and we are dealing with those. But generally speaking, those businesses are really just feeling the same effect, this uncertainty effect that's dripping into the market overall. Eroding confidence both at the consumer level and then of course the step down from us at the retail level, and that's really what we're feeling now. I would say that they were a little later to the party. I think Canadians tuned into the fact that there was a risk of trade disruption shortly after election day and well before inauguration, and I think we were starting to brace ourselves early. Think December, January of last winter, we started, I think, to dig in and start thinking about what does this mean for us. And certainly in February, when the first tariff announcement was made, and then obviously deferred, I guess is the right answer or the right phrasing for what happened there. I think Canadians very quickly said, okay, this is real, and we've got to brace ourselves for some kind of trade disruption. And I think we were getting ready for that. I think our American business took a little longer to realize that this was in fact a real thing. So they're maybe a little later to the party, but now experiencing very much the same kind of cautious behavior of our customer base down there. Making sure that they're well analyzing procurement decisions and things like that. So we see those same effects happening in that business. But direct tariffs, we're paying some. They're fairly targeted as well, mostly on imports from Asia as opposed to from Canada.
Taiga's stock price on the TSX spiked toward the end of May, a tremendous increase. What, in your view, is the upside of investing in Taiga from an operational and an economic standpoint?
I'm, in fact, not an investment advisor, so I'll be really careful about what I say here. And certainly, I hope nobody makes any investment decisions based on my comments. But I think overall, let's talk about the building supply industry. I mean, I'll go back to my points before. I think that the case for housing is very strong, and those that supply the industry is still very strong. At the 30,000 foot level, we're just suffering through a little bit of a disruption right now in the market, but otherwise, I think the long-term case for investing in the industry is strong, and of course, by extension, I think that there's a strong case for investing in Taiga. So if you're asking for me to make my short pitch on why somebody'd be interested in investing here, I'd say that there's really two reasons, two key benefits I think that somebody might look at making an investment here. The first is stability. I think we've got a great earnings track record and one of generating cash. Obviously, those are the financials, but more than that, I think we built really good systems and processes. We focus on our motto of being 100% right and 100% on time, and I think that reliability permeates through the whole business. That when we live by that motto, it's not just our customers, it's our employees, it's our vendor partners, and I think shareholders also benefit from us having that attitude. And the other component is I just think our progressiveness. We're not standing still and trying to just collect the spoils of our efforts as a business. We're making long-term focused investments, especially in technology, aimed at moving us and our partners forward. A dollar invested here is a dollar invested in someone trying to build a business for the future of the LBM industry. So I know this sounds a little bit like a commercial, so I won't delve too much further into all of that. But I think the final point I'd make here is I'd just be remiss if I didn't just say that I'm obviously quite biased on this, but I think if you're putting your stock in Taiga, you're also really backing some really great people, some really hardworking folks that are doing whatever it takes to get things done every day, for each other and for our customers and our vendors. So, I think that's the case I would make for investing here and in the LBM industry in general.
Thank you. And we at Hardlines, of course, also do not offer investment advice, but we appreciate your insights nonetheless.